internet of value at Ripple, we're thinking much bigger than just cross-border payments. It's kind of like Amazon with rare books in the early days, just this market happens to be a $10 trillion market.
We are at a historic turning point.
Said in the past that you are doing for money what email did for communication.
Moving the whole revolution forward.
Take on it.
There's trillions of dollars parked around the world.
XRP.
Is there a possibility that Ripple could take over Swift one day?
Well,
welcome back, ladies and gentlemen. So 24 hours Ripple. Let's get right into today's video. We are going to go over MarketCap. We're going to get some assistance from David Schwartz. Here's a little teaser of what he thinks about it.
It's more the market cap, but really it's not quite like a higher price tends to mean a higher market cap, and a higher market cap tends to mean higher liquidity. It's really more like the sort of availability of liquidity that determines how easily you can use an asset for payments when you don't have closed loops. Obviously,
we'll get into the full 4-minute video in a moment. We're also going to get into what would the value of XRP look like if we were to obtain 0.5% of $1.4 quadrillion. And why are we using that number? It's because, remember Graham Rodford, he is the CEO of Archex, saying this.
Tens of trillions, I think we could see. And bearing in mind it's 1.4 quadrillion, this is still a tiny slice of a huge market. 30 to 50 trillion, all on XRP, all trading on Archex.
Here we go, $50 trillion. 2 years from now, Ripple, Twitter will replay the session.
And he's predicting that by 2025. And why is he so bullish? What kind of conversations are happening behind closed door meetings? Well, take a look at this. Archex is currently collaborating with Matico and IBM. Matico is owned by Ripple. Ripple bought Matico for $250 million. IBM announced that they're working with Matico in December 5th of 2023. IBM has worked with Matico, an IBM business partner and digital asset custody provider, and tier 1 banks to help ensure OSO addresses client requirements. These are some monumental partnerships that are, being done directly and indirectly, and Ripple is involved. XRP will be the core and the foundation. A lot of people are going to miss out on this opportunity. And in a moment, we're going to get into depth and liquidity and why it's so important. But you know what's more important? This post that was made by Oliver Segovia. He is the senior director, head of product marketing payments at Ripple. His previous resume is very impressive. $1 trillion companies. Coinbase will be $1 trillion company. Google is $1 trillion company. Facebook is $1 trillion company. And now he's working with Ripple. A lot of people are going to miss out that Ripple is the next Amazon, is the next Google, but it will be much larger than Google and Facebook and Amazon. And a lot of people are going to be in for a rude awakening. But listen to what he says here. We were right all along. Remember I said a lot of events are taking behind the scenes that we are not going to hear about. And here's a mic drop moment. 90% of our businesses outside of the United States, after being relatively quiet for the past 3 years in the US for Ripple payments, we are geared up to announce new product updates powered by our money transmitter licenses that cover the majority of US states. Wow, this was 2 days ago. So gear up, because 2024, there's going to be a lot of big moves coming in this crypto sector. Ripple's bullish, so is the entire industry as a whole, especially with the Bitcoin ETFs are now, these guys are in now, folks. There's no looking back. The big money is in, and now they're slowly paving their way in. And now let's get into depth and liquidity and why it's so important. But just remember this clip first from Daniel Eden.
If you think about the number of different currencies and how much liquidity needs to be available to make those transactions, it becomes less and less efficient.
And liquidity is sort of the secret sauce to making that work.
Because there simply often isn't enough liquidity there. And when I say liquidity, what I mean is depth of the market. It means that if I want to now send 100 Swiss francs, maybe I'll find 100 Swiss francs for for pounds. Maybe I'll find a counterparty. But if I want to send 100 million, I may not find a counterparty. So there isn't enough liquidity, maybe, between Swiss francs and pounds for me to send $100 million every day. But there may be more liquidity if we pool all of our liquidity into one type of currency. Once you pool all that liquidity, you can create more efficient pricing structures.
And what makes XRP stand out for depth and liquidity? First, let's talk about regulation. Ripple is highly regulated across all jurisdictions, so it could provide a level playing field for these real world assets to be moved across through different jurisdictions. Depth and liquidity. Liquidity refers to how easily an asset can be bought or sold in a market without affecting its price significantly. So think about the daily FX markets that produce about $7.5 trillion on a daily basis. In FX markets, a lot of the fees that are used up is the spreads between these FX transactions. That's where a lot of the fees are eaten up. Market depth, so important. And that is why I tell you guys, market cap means nothing. Market depth is a measure of the market's ability to sustain relatively large market orders without impacting the price of the asset. Depth is the often visualized in an order book showing various buy and sell orders at different prices. A market with deep order book has a large volume of buy and sell orders at various price levels, indicating a healthy market where participants can execute large transactions with minimal slippage. So let's just say a company wants to do a $100 billion transaction and XRP is $1. Well, we're gonna run into a liquidity crisis because one, we don't have enough XRP circulating, and two, it is impossible to do that. It would drive up the price extremely fast. And before I get further into it, listen to what David Schwartz says here.
As far as what I meant, so there's a specific quote that's kind of annoying to me because it's been repeated by many people taking out of context. But let me be, so to be very clear about what I was saying in the quote that I was talking about, the cost of XRP doesn't directly impact the cost of a payment. So in other words, if I want to buy something from you and the value of that thing is, let's say it's the equivalent to $1 million US. Like the amount of XRP, the price of XRP is going to determine if I'm going to pay you an XRP. The price of XRP will determine how much XRP I have to give you, but it won't make the payment any cheaper or more expensive, right? If the price of XRP is very high, I'll give you fewer XRP, but it'll cost me more to get them. And if the price is low, I'll have to give you a lot of XRP, but I paid less for each one. So there's no such thing as like cheap XRP making payments cheap or expensive XRP making payments expensive. And that's the point that I was trying to make there, that the price of XRP doesn't determine whether payments are cheap or expensive. But what does happen is, in general, the higher the sort of market cap of the asset, it's not so much the price per unit, but the market cap does impact the ability to use the asset for payment. So for example, let's say I wanted to buy a house that was worth $1 million USD and I wanted to use Bitcoin to do it, right? Back when Bitcoin was like $100, you couldn't realistically use Bitcoin to pay $1 million because the market didn't have enough liquidity. Like if I wanted to buy $1 million worth of Bitcoin back then, I would have pushed the price up. And then when I gave the $1 million worth of Bitcoin to you, let's say to buy your house, when you go to sell those, you would push the price down. So you would take a loss on the buy and I would take a loss on the sell, and that would make the payment suck for both of us. But today, I can buy $1 million worth of Bitcoin without moving the market, and you can sell $1 million worth of Bitcoin without moving the market. So the higher, it's not so much the price, it's more the market cap, but really it's not quite like a higher price tends to mean a higher market cap, and a higher market cap tends to mean higher liquidity. It's really more like the sort of availability of liquidity that determines how easily you can use an asset for payments when you don't have closed loops. Obviously, if you have closed loops of the assets, we'd all love to see everyone in the Bitcoin space and the XRP space and the Ether space. If you see it for payments, you want to see closed loops. Like I want to get paid in XRP. I want to pay my landlord in XRP. I want to pay my electric bill in XRP. Then I'm happy to receive. Then we don't, then it doesn't matter what liquidity there is because you're strictly in the asset. But in the short term, before you can get to those closed loops, you're going to have open loops. Like maybe I can get Ripple to pay me in XRP, but then I can hold, and maybe I really like holding XRP. Let's say I love holding XRP. So yeah, I'd like Ripple to pay me in XRP, so I'm holding XRP as soon as Ripple pays me. But then when I have to pay, for groceries, my grocery store is not going to take XRP yet. So I have an open loop, and I need some liquidity in order to be able to buy my groceries. Now, if my groceries, if there's not a lot of liquidity and it's very difficult for me to convert my XRP into dollars, then that open loop system doesn't work. And so so the price of XRP doesn't matter to this, right? Ripple might pay me more or less XRP. I might need more or less to pay my bills, but it doesn't matter. The system works just as well. A cheap XRP isn't meaningful there. But what is meaningful is how expensive or how much it cost me to sort of convert. And especially for big payments, like if you want to make $1 million payment, it has to be that $1 million buy or sell of XRP doesn't move the market a lot, because if you move the market, it's always going to be against you, right? Moving the market always means it's going to cost you more to buy, or you're going to get less when you sell. So if you're moving the market, it's going to effectively a tax. So what I was saying in that quote is that the XRP being low in price doesn't make it better for payments. In fact, it probably leads to a smaller market cap and less liquidity, which makes it worse for payments.
And now let's go over XRP bank and depth requirement. For XRP to be widely adopted by banks and financial institutions, especially for cross-border transactions, and we're not even talking about real-world tokenized assets, it needs to ensure it has sufficient depth and liquidity. Banks deal with large sums of money, and when they enter or exit positions, they require assurance that their transactions won't cause significant market disruption. A deep and liquid market for XRP would provide this assurance, making it a viable option for these institutions. Depth and liquidity also contribute to risk management, which is crucial. And this is pretty much the killer combo. Depth and liquidity are crucial for the adoption of XRP by banks and financial institutions because they ensure market stability, facilitate quick and efficient transactions, increase market confidence, and reduce transaction costs. For XRP to be considered a viable tool for cross-border payments by these institutions, it must maintain high levels of both market depth and liquidity. So with that being said, ladies and gentlemen, let me know what you guys think in the comments down below. And here is a quick breakdown. If XRP were to obtain 0.5% of the $1.4 quadrillion is $7 trillion.
Tens of trillions, I think we could see. And bearing in mind it's 1.4 quadrillion, this is still a tiny slice of a huge market. 30 to 50 trillion, all on XRP, all trading on Artex.
Here we go, $50 trillion. 2 years from now, Ripple, Twitter will replay the session.
So $7 trillion would be the market cap that we are speculating here, with 70 billion XRP. And you heard what David Schwartz said. If you're unsure, go rewatch it and then come back to this. So XRP's at $1 and we have, a $7 trillion market. It's not going to work because we would require 7 trillion XRP. But the value of XRP at $100 would give a $7 trillion market cap. But as you can see, that still won't work because then you still require 140 billion XRP to maintain that. It doesn't work. So what must happen? Well, the price would go up. You got a fixed supply and you got demand coming in. I mean, what Brad Garlinghouse said, you don't need to go to MIT to know what's going to happen. With that being said, ladies and gentlemen, I do appreciate every single one of you guys. Let me know what you guys think in the comments down below. $100 XRP is dirt cheap. $100 XRP will occur within our lifetime. With that being said, enjoy the rest of your Saturday evening, and we will be back with another video.
We started building RippleNet with the thesis that crypto liquidity would eventually be able to support robust global payments, large payments. RippleNet was designed so that customers seeing the benefits of our fiat-based network could flip the switch to ODL once the market was mature enough. And this is exactly what's happening. Flip the switch.
I think what we're building has, it's solving a real problem. And I think all of the tokens, my advice to anybody would be, understand the utility. If there's real utility and there's real value being delivered to a real customer, there will be value in the token.